Welcome to you both. Chris, make your case. Why should people still pick it up here when we're talking about 27 new highs already this year?
Yeah, I mean, I think that the big picture is that the gold price is still here, notwithstanding big withdrawals and redemptions from gold-backed ETFs. So in the United States, we've seen consistent selling of gold-backed ETFs. Gold-backed ETFs like the GLD are typically the swing supply or demand of gold in the market, because there's typically a baseload of demand from Chinese and Indian consumers, a baseload of supply from the mines. So the ETFs make up that swing supply or demand. And we've seen a big supply of gold come on the market from these ETFs. And, notwithstanding that, there's been this big move up. So I think that if and when we do see Westerners become interested in gold, which I think that they will, we'll have another leg up in the price.
Bob, we know they're getting interested because Costco is selling little gold bars, and people, they look at inflation and they think, well, maybe I should own some of this. Peter Bookvar also made some good points to me in the break about how Chinese central banks, global central banks, have been very interested in buying gold this year, and that gold has essentially outperformed the S&P since the turn of the century.
That's correct. However, if we sort of look more recently, gold has clearly underperformed a number of other commodities, most notably copper and silver. And just in the last month, gold has obviously underperformed the S&P. And, if we look at what's happening in gold markets at the moment, China is absolutely key. It's not just the central bank of China that has increased its asset allocation to gold. We've seen Chinese retail investors, strong demand from that source for gold purchases, partly because they have fears about the Chinese economy. And also there are these rumors, which obviously the central bank are dismissing, that China may consider a devaluation of the Chinese renminbi. And that is obviously causing some fear amongst Chinese investors. I think another factor, obviously, is that with sanctions, Russia, which is the second largest producer of gold worldwide, its marketing of gold onto global markets is obviously disrupted because of those sanctions. Now, if we look forward, clearly one big problem for gold, apart from the fact that it's technically overbought, the price is obviously very high relative to where we've been in the last couple of months. But we are now in a monetary regime of positive real rates. And, as a result, I think that is really going to cap the upside. I think other factors that if we look at what is supporting gold, a number of the factors could prove temporary. So, I do think that, not necessarily thinking very long term, but just over the coming months, gold is vulnerable to a setback.
It has been interesting to see it rally so sharply in the face of these persistently high real rates. Chris, not to get too in the weeds about it, but where do you think gold could be headed? The 1980s adjusted kind of high would be around the 3,200 per ounce mark. We're still about $1,000 below that. Are you seeing a breakout of that nature coming?
I think that's definitely in the cards. I mean, when we look at what's happened with Bitcoin, for example, when that goes from 55,000 to 67,000, a move right now from 2,400 up to 3,200, I would just say, why not? And again, the really interesting factor here is that we're not seeing any real interest from American buyers. I mean, aside from, we're seeing Costco, we're seeing the retail thing, but in terms of like American institutions buying the gold-backed ETFs, it's just not there. And so if we ever do see that little tailwind, for sure, I could see it going to $3,000 an ounce.